It might be the festive season, but Dalal Street does not seem to be celebrating. What's the reason for the volatility in the markets, and how should you as equity mutual fund holders deal with this? I have with me Harsha Upadhyaya, the Chief Investment Officer for Equities with Kotak Mahindra Asset Management Company Limited. Hi Harsha, and let's talk about this market move that we are witnessing, a massive downtake. There's attribution to earnings, to China, to the consistent FII outflows. Give our viewers a take of what's leading to this volatility.
First of all, if you look at how markets have performed over the last 4 years, there has hardly been any phase of correction or a sideways moment in the market. To that extent, yes, I mean, there has been a significant increase in valuations over a period of time. And that's the backdrop, right? After that, we had June quarter earnings, which were very, very different than what we had seen post-pandemic. It was the first quarter of earnings where the growth was just a single-digit growth on a year-on-year basis for the Nifty basket, right? On top of that, the expectations for September quarter have also been muted. And until now, whatever we have seen in terms of the results, they have also been more or less in line with the muted expectations. So nothing great is happening on the earnings front as of now. All the hope is on the second half, as we believe some sort of pickup during the festive season in terms of volumes and some better delivery in terms of earnings. On the other side, we also had the Chinese market, which was at a relatively better valuations than India, suddenly announcing a couple of measures to stabilize the economy, support the economy, etc. So that has actually led to probably some investors looking at China with a more favorable perspective as compared to India, given the valuation difference and also the tactical probably positioning that they wanted to do just after those policy measures. So yes, probably some money out of India has gone to some other markets. It's possible. We have seen almost $10 billion of selling over the last 4 weeks from foreign institutional investors in India. So to that extent, it's possible that it has moved to other markets. However, over a period of time, as we have discussed in all our earlier shows as well, the dominance of foreign institutional flows to determine our market movements has reduced over a period of time. So to that extent, although it has been a large $10 billion outflow, that has not made a similar kind of an impact that it would have made probably a decade earlier or 5 years earlier. Yes, but volatility is part of the markets, and especially at these valuations and the fact that earnings are not coming up to what the expectations have been, we should expect some sort of a consolidation in the market, either a time-wise correction or maybe some more value correction. But for a long-term investor, I think these are really good entry points. And if you keep investing at these levels, you should be really able to get reasonable returns from equity.
Valuations has been a key complaint for a lot of investors looking at India. Now that we've seen this bit of correction, and like you're saying, you're anticipating perhaps a bit more, do you think valuations will come down to a bit more of a palatable level?
On the large cap side, first of all, the extent of overvaluation was not that high. So to an extent, I think it has corrected. I don't think one can say that it is very, very expensive valuation. So long-term investors can invest at these levels, even their lump sum money, if it is coming in large caps. However, the mid and small cap segment, even after the correction, is trading at a premium to its historical valuations and also premium to large cap valuations. So to that extent, if you are investing into mid and small cap strategies, it's better to stagger your investments and also keep your investment horizon longer than what you would keep for a large cap basket. I think that would be the advice.
So considering that we are in store for perhaps a bit more volatility, how do you advise equity mutual fund holders brace themselves for it?
For equity mutual fund investors, I think the time-tested investment methodology of systematic investments would work even in these markets. I think that should be the best way of investing into equity markets. And the tilt within the equity portfolio should be more towards large cap, given relative valuation comfort. So any fund which has, let's say, at least a 40-50% exposure to large caps should be picked as investment avenues. And if you keep it for longer term, I'm sure that India growth story is still intact and you should be able to get reasonable rewards for that long-term focus.
All right, Harsha, thank you so much for joining us.
Thank you so much.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.